Hello traders and welcome to another video review. Today is Monday, the beginning of the new week, May 20th, 2024. Let's find out what's going on the economic calendar today. Overnight data published from China were in line with the expectations. The People's Bank of China loan prime rate has stayed at the same level of 3.45%, just as expected and just as the last time. Tertiary industry activity index from Japan dips to minus 2.4% from 2.2% last time, which is way below the forecast of 0.1%. We still have the FOMC member Bostic to give a speech at 2:45, and at 3 o'clock we have the Fed Waller to give a speech, and then at 8 o'clock we got the FOMC member Mester to give a speech. So as you can see, almost non-event London and the New York session for the Monday. Nevertheless, let's just switch to the technical part of this review, and we are going to start with majors. Euro dollar goes first. For our chart of the euro dollar is showing us a bounce from the level of 1.0708, so this level will now be the intraday technical support. Very nice bullish engulfing pattern, movement to the upside above the 50 periods moving average. So what are bulls up to? They want to test this zone here. So this zone is the next target for the bulls after the 1.0895 level is violated. Momentum is still strong, it's still positive. So the recent spike to the upside is still backed by the momentum. So there is still a chance for the bulls to continue to go higher. The British pound has made another swing high, just above the last one, located at the level of 1.2707. The local high was 1.2710. Basically 3 pips higher. Nevertheless, as you can see, this is very, very strong supply zone, and we should see some kind of a reaction to this situation here. Moreover, if you look closer, you will be able to see that we are going up, right, on market, on the chart. Let me just grab my arrow. There you go. So we are going up. We are above the last swing high. Yeah, that's correct. But on the momentum, we are talking about the RSI 14 periods. We are going down. So there is a clear bearish divergence between the price and the momentum, so we should see some sort of the movement to the downside, some sort of the pullback, some sort of the correction. We will see what is going to be and how deep it's going to be. Nevertheless, what we know straight on is that this zone here cannot be misjudged. Okay, so even if we broke above this zone by 3 pips so far, it doesn't actually means that the movement to the upside is done. Moreover, from this low here, this low and the technical support 1.2446, if we consider the Elliott wave, impulsive wave, so from the bottom here, if we count it correctly, let's say this would be the wave 1, that would be the wave 2, this would be the wave 3, that would be somewhere here, let's say wave 4, and this is wave 5. So we have the 5 wave impulsive structure to the upside. 1, 2, 3, 4, 5 waves in wave 3. Wave 3 is the longest one as far as I can see, so everything is correct. We should prepare for the movement to the downside in form of some kind of a pattern. So what is the most popular pattern? Some sort of the A, B, and C, possibly towards the level of 1.2635, where is the swing high as well from May 3rd, 2024. So this is what is going on with the with the current Elliott wave correction. Let me just make it black so everyone can see. There you go. So this one was done, and it's up. So let it be red. Sorry, green. So we got a 5 wave to the upside in impulsive way, and now ABC to the downside. The simple correction, it doesn't actually mean that the correction will be actually simpler, but the simplest one is the ABC to the downside. We should see this development soon enough. It's backed up by the bearish divergence. US dollar to Japanese yen. Let's just take a look at this one, because as you know, we got worse than expected data from the Japanese economy. So what do we have here? Is basically kind of a horizontal trend since the bounce from this zone here, which is very nice zone for the boost. This is the demand zone. So if we place it here, you can see it clearly that this is the demand zone, and we got the bounce from this zone, but we got stuck in between two lines here. 50 and 100 periods moving average RSI is 52, so it's basically neutral, and the local high is 155.99. so as long as we stay inside of this very narrow zone, yeah, so let me just zoom in so you guys can see. As long as we stay inside of this very narrow zone, then there is apparently no chance for this market to continue to move higher. 155.22, and the lower zone is apparently 155.99. so we stay inside of this zone. We need a breakout, possibly breakout to the upside, because the momentum is neutral, but as you can see, it's still above the level of 50, not that much because it's only 2 points. However, the outlook on the US dollar to the Japanese yen remains to the upside, and there goes the arrow. Next target is 156.79. There you go. So that's the US dollar to the Japanese yen. Let's just take a look at gold, and the gold is on the new all-time high as far as I can see. If we switch to the daily time frame chart, there you go, we got a breakout to the upside, but the situation with the gold is tricky as well, because on the gold market we got the bearish engulfing pattern. Sorry, we got the bearish divergence, and engulfing pattern might be done might be made very soon. So we got the bearish divergence, and then we got, of course, on the RSI, and then we got the new high on the price, right? So if we zoom in, we can clearly see that someone something is off on this chart. It's either this indicator or the price. As far as I'm concerned, despite the fact that the momentum is strong, it's positive, it bounced basically. It bounced from the level of 50, right? So this level was the neutral level for the gold. Okay, so let's say it's a 49.90. No, okay, so it's a level of 50. We got the bounce. Now we are approaching extremely overbought market conditions, and to be honest with you guys, this might be this kind of a chart that is looking for the correction. So two blue lines, I'm switching it to red because of course there are technical resistance lines, and this is the technical the supply zone made by the two technical resistance lines. So we should see the downside movement or horizontal movement as we approach the extremely overbought conditions on gold market. Otherwise, the trend is still up in the long term. Last but not least, as usual, Bitcoin. We are looking at the daily time frame chart of the Bitcoin at the beginning because we want to see the context of this recent movement to the upside. As you can see, first we broke, let me just play with my chart, there you go. First we broke above this short-term trend line, yeah, we got the low, local high, lower high, pullback, breakout to the upside, but still lower high, and now we're testing this blue arrow high, 67,280, and we have a breakout because there is 67,718. So we got a new local high. So this sequence of lower lows and lower highs is no longer valid. It looks like we are starting the bullish movement, and the next target is of course $75,000, but this is the zone that needs to be violated in order to get towards the new next target for the boost. So 71,653, 73,900 is the zone. And if we will have a very nice green candle today with strong positive momentum, right, we can see the RSI on the daily time frame chart, then we might prepare ourselves for the at least $71,600 to be hit soon, basically, because the bulls are in charge of this market. Let's just switch to the 4-hour charts to see more details. There you go. The bulls are still being rejected from this level. However, there is no like a really deep dive here. Okay, so we got this local extremely oversold, overbought conditions. We picked about the level of 72. Then we went down for a pullback, and the local low was 65,896. And then we got the potential breakout to the upside in progress. So please keep an eye on the Bitcoin. It looks very, very bullish. The bulls are in charge of the market, and they want to resume the long-term uptrend on Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.